You weren't supposed to hear this. What I'm about to explain sits at the intersection of gambling, crypto markets, and psychological warfare. A place where milliseconds decide money, where volatility becomes entertainment, and where the line between prediction and manipulation blurs so fast most people don't even see it happening. This isn't just about a new crypto game. It's about how financial behavior is being rewired in real time. And once you understand it, you'll never look at Bitcoin betting platforms or your own decision-making the same way again. If you want real financial truths they don't teach, hit subscribe and turn on notifications. You don't want to miss what's coming. Because this isn't just a partnership announcement, it's a signal. Bitblox, a software provider known for building Bitcoin-based gaming mechanics, has partnered with Betcoin.ag, one of the most established crypto casino and sports betting platforms in the space. On the surface, it sounds simple, a collaboration, a few new titles, more options for players. But under the surface, something much more strategic is unfolding. Bitblox created a series of price prediction games, most notably Up or Down and Up or Down, Turbo. The premise feels almost innocent. Predict whether Bitcoin's price will rise or fall within the next 60 seconds or 20 seconds if you choose turbo mode. That's it. A binary choice. Up or down, green or red, win or lose. Fixed odds tied to real-time Bitcoin market movements, no traditional random number generator, no slot machine algorithm spinning in the background, just live market data and your decision. Now pause for a second and think about what that really means. You are no longer betting against a casino algorithm. You are betting against volatility itself, against liquidity flows, against whales who can move price with a single order, against news catalysts engineered to trigger emotion, against stop-loss hunts designed to liquidate leverage traders, and you're doing it in 60 seconds. This is where psychology becomes the real battlefield, because the average retail participant believes they're making a rational prediction. They believe their understanding of Bitcoin trends, support levels, resistance lines, and market sentiment gives them an edge. And sometimes it might, but what they're actually stepping into is a compressed version of the global liquidity cycle, a microcosm of institutional accumulation and distribution, squeezed into a 1-minute window. Up or down isn't just a game. It's a distilled version of the financial markets. Let's talk about the timing. 60 seconds, 20 seconds. That time frame is deliberate. It eliminates long-term analysis. It removes macro fundamentals. It strips away deep technical patterns. What's left? Raw impulse, fear, greed, instinct. The exact emotional triggers that drive larger market cycles. When Bitcoin spikes suddenly, retail investors feel FOMO. When it drops sharply, they panic. Now imagine compressing that emotional roller coaster into a 20-second decision window. Your heart rate increases, your brain shifts into fight or flight. You stop thinking strategically and start reacting. And that reaction, that split-second choice, becomes monetized. This is where it gets interesting. The games are marketed as non-RNG based. That means outcomes are tied directly to Bitcoin's real-time market movement. In theory, if you understand crypto volatility, liquidity zones, order book imbalances, you could increase your probability of winning. Knowledge becomes leverage, skill blends with chance, and that narrative is powerful because it taps into something deeper, the illusion of control. Retail participants crave agency. They don't want to feel like they're spinning a slot machine. They want to feel like traders, strategists, insiders. When a game ties payouts to real market data, it reinforces the belief that intelligence equals advantage. And sometimes it does. But here's the part most people don't consider. The crypto market itself is not a neutral battlefield. Large holders, and whales, can influence short-term price movements. Liquidity pools can be targeted. Stop clusters can be hunted. Sudden micro spikes and dips can occur in thin order book conditions. In a 20-second window, even a small burst of volume can flip direction instantly. So when you choose up or down, you're not just predicting organic movement. You're stepping into a system shaped by capital concentration. Now layer this onto Betcoin.ag, a platform already known for crypto-based casino games and sports betting. By integrating up or down into its core offerings, the platform isn't just adding a new title. It's merging two psychological arenas, gambling behavior and trading behavior. Think about that convergence. Sports betting trains you to assess odds, read momentum, and chase streaks. Casino gaming conditions you to accept variance and pursue recovery after losses. Crypto trading exposes you to volatility and narrative-driven emotion. When you combine all three into one seamless ecosystem, you create a powerful engagement loop. And engagement equals retention. Retention equals liquidity. Liquidity equals revenue. Bitblox and Betcoin.ag describe this as diversification. Expanding crypto-centric betting opportunities, broadening appeal, creating innovative experiences, and they're not wrong. From a business standpoint, it's strategic brilliance. They're capitalizing on a generation that grew up watching charts on their phones, placing bets on games, and chasing digital assets. But from a psychological standpoint, something deeper is happening. Financial behavior is being gamified at high speed. The market becomes entertainment. Volatility becomes a thrill. Decision-making becomes instantaneous, and over time the brain associates price movement with dopamine release. Win, dopamine spike. Loss, cortisol spike. Try again. Repeat. The cycle tightens. Now let's zoom out. Crypto itself was born as a rebellion against centralized financial control, a decentralized alternative to fiat currency debasement, a system designed to remove intermediaries and empower individuals. Yet as adoption grew, institutions entered, hedge funds accumulated, exchanges consolidated power, derivatives markets expanded, leverage increased. What once symbolized freedom evolved into another liquidity battlefield. In that battlefield, short-term volatility is often noise generated by larger positioning strategies. Institutional players accumulate during fear. They distribute during euphoria. They create narratives through media partnerships, influencer cycles, and sentiment waves. Retail reacts. And in a 60-second prediction game, you're reacting to the aftershock of those larger forces. That's not inherently bad. It's just reality. But here's the twist. Because the game uses real Bitcoin price data, it acts as a mirror, a raw reflection of market psychology in miniature form. If Bitcoin is in a high volatility environment, perhaps ahead of a macro announcement, ETF flow data release, or regulatory headline, those micro movements intensify. The more unstable the market, the more unpredictable the short-term direction becomes. Volatility is opportunity. Volatility is risk. Volatility is addictive. Bitblox plans additional titles through 2024 and beyond. Names like 3 in a row and BitSlap suggest even more rapid interaction cycles. Each new format adds layers of engagement, new decision mechanics, new emotional triggers. The ecosystem expands, the loop tightens. From the outside, it's innovation in iGaming. From a deeper perspective, it's the fusion of financial speculation and instant gratification architecture. Now ask yourself something uncomfortable. If most retail traders already struggle to manage emotions on hourly or daily charts, what happens when decisions shrink to 20 seconds? Discipline becomes rare. Impulse dominates. And that's where silent wealth transfers can occur, not necessarily through direct manipulation, but through predictable human behavior. People chase losses. They double down after a near win. They increase position size after a streak. This is behavioral finance 101. Loss aversion, recency bias, overconfidence bias, gambler's fallacy, all activated within seconds. Meanwhile, the underlying Bitcoin market continues its larger cycle. Institutional accumulation phases, distribution tops, liquidity grabs, stop-loss cascades, ETF inflows, macro tightening, currency debasement through inflation, the silent repricing of assets against weakening fiat currencies, and the average participant focuses on the next 60 seconds. This isn't an attack on the platform, it's an observation about the system, because the real power move here isn't just creating a game, it's aligning entertainment with live market data. It's turning financial volatility into a consumable product. That changes perception. When price becomes a game mechanic, the seriousness of capital allocation subtly shifts. Money becomes chips, charts become roulette wheels, and yet, unlike pure RNG casino games, there's a layer of genuine market exposure. That hybrid design is what makes it psychologically compelling. You feel smart when you win. You feel unlucky when you lose. Rarely do you feel manipulated. But markets have always been arenas where informed capital extracts from emotional capital. Whether through leveraged liquidations, panic selling during crashes, or euphoric buying near tops, the pattern repeats. The difference now is speed, 20 seconds. Think about that. In 20 seconds, a whale can execute a market order large enough to nudge price through a micro resistance level. In 20 seconds, algorithmic trading systems can rebalance positions. In 20 seconds, social media can push a rumor that triggers a wave of buys or sells. And in that same 20 seconds, you are choosing up or down. The partnership between Bitblox and Betcoin.ag symbolizes something larger than new game releases. It represents the normalization of ultra-short-term financial speculation as mainstream entertainment. It represents a cultural shift where understanding charts becomes a form of gaming skill. Brand executives describe tremendous player response. They speak about innovation, growth, fostering interest in crypto-based betting, and from their perspective, they're building a product people enjoy. There's demand, there's engagement, there's revenue. But here's the warning. If you treat markets purely as adrenaline engines, you become vulnerable to the very forces you think you're mastering. True financial power comes from understanding cycles, positioning before narratives shift, accumulating during fear, and exiting during euphoria. It comes from recognizing when liquidity is being engineered and when sentiment is being manipulated. Short-term prediction games can sharpen awareness of volatility. They can teach you how fast markets move, but they can also condition you to prioritize immediacy over strategy, and that's where the silent reset happens. While retail focuses on micro movements, institutional capital studies macro trends. While players chase 60-second outcomes, asset managers analyze long-term supply dynamics, regulatory shifts, and global monetary policy. Currency debasement continues quietly in the background. Inflation erodes purchasing power. Governments expand balance sheets. Hard assets reprice over time. Bitcoin, as a scarce digital asset, oscillates violently in the short term, but trends according to broader liquidity conditions in the long term. The elites don't win because they guess correctly every 20 seconds. They win because they understand positioning. They accumulate when narratives are negative. They distribute when headlines are euphoric. They use volatility to mask larger transfers of wealth, and they rarely act emotionally. So here's the deeper reveal. Up or down is a microcosm of a bigger truth. Financial systems are arenas of attention. Whoever controls attention influences behavior. Whoever influences behavior influences capital flow. When volatility becomes entertainment, attention locks onto price ticks. And while attention is locked, structural shifts can occur unnoticed. ETF approvals, regulatory changes, institutional custody expansions, banking integrations, all of it unfolding while the crowd watches the next candle form. This doesn't mean you shouldn't participate. It means you should participate consciously. Understand the layers, recognize the design, know when you're engaging for entertainment and when you're allocating capital strategically. Because the most dangerous place in finance isn't ignorance, it's overconfidence, believing you've mastered a system that was built to exploit emotional reflexes. The real battlefield isn't the chart, it's your mind. Fear pushes you to hit down after a red streak. Greed pushes you to hit up after 3 greens. Hope convinces you the next round will recover losses. And discipline, true discipline, is rare. Bitblox and Betcoin.ag are innovating within the crypto gaming space. They're building products aligned with digital native behavior. Fast decisions, mobile interfaces, instant outcomes. In many ways, they're ahead of the curve. But you need to decide what role you play in this ecosystem. Are you the impulse, or are you the strategist? Because every financial cycle eventually reveals who is accumulating quietly and who is reacting publicly. Bitcoin will continue to surge and crash. Media narratives will oscillate between crypto is dead and new all-time highs. Whales will continue to move liquidity in shadows, and platforms will continue to build engaging interfaces around price movement. That's the evolution of digital finance. The question is whether you evolve with it mentally. Here's the legendary ending most people won't tell you. The real edge in markets isn't predicting the next 20 seconds. It's predicting human behavior. If you can understand how fear and greed propagate through crowds, you can anticipate volatility before it erupts. If you can detach from immediate outcomes, you can position before narratives shift. And if you can see games for what they are, compressed simulations of larger systems, you can engage without being consumed, because once you see the architecture, you can't unsee it. The partnership between Bitblox and Betcoin.ag isn't just a product launch. It's a reflection of where finance is heading: faster, gamified, psychologically immersive, a world where the boundary between investing and entertainment dissolves. And in that world, only the mentally disciplined survive long term. So here's my question for you. When you look at a 20-second Bitcoin chart, are you seeing opportunity, or are you seeing a mirror of your own impulses? Drop your answer in the comments. Send this to someone who needs to hear it. And if you're serious about understanding how money really moves behind the scenes, not the surface headlines, but the hidden positioning, subscribe and turn on notifications now, because the next shift won't wait for you to be ready. And by the time most people realize what's happening, it's already too late.